So if you have any stocks specifically that you would like to take a look at, we can evaluate them. By all means, just go ahead and list them. We'll give it a couple more minutes here for anyone to show up, and after that, we'll be good to go. So by all means, if you have any specific stocks or any questions, you can add them also to the questions and answers area, and then we'll go through those here shortly. So we'll give it one more minute and then we'll get started. Take a look at gold. Okay, yeah, let's take a look at GLD. Okay, so typically, just to answer this question right here, typically I always start out with the monthly, especially if I'm new to the stock, which this one I'm very familiar with. But I always start with the monthly, then I go into the weekly, then I get into the daily. So that's typically what I do and what I look for. I also look for any ABCD patterns that are evolved. So the main question really comes down to how long are you looking to be in the trade and what are you looking to get out of the trade. With gold right here, what you want to watch is you really have this ABCD pattern that almost completed or pretty much completed. And if you're familiar with ABCD patterns, once they complete, a stock either needs to go slightly sideways or it'll go break out further after that sideways consolidation pattern, or the other approach, which is what we're doing, is the pullback. So that's kind of what's happening. Now we are pulling back on slightly lighter volume for now. Today was a larger break because of that wide price spread bar right there and below the moving average of the 50-day. So that can accelerate certain things. And if you draw this line actually across, you can see that also comes into the line of resistance and support as well. So that's kind of the shorter view. If you go into the weekly, you can kind of see that every time this gold tries to get a little bit higher, you can see here kind of the ABCD pattern as well. And then we break lower. Here's the ABCD pattern to the downside, and then we have the ABCD pattern to the upside. So, if you're looking for a value buy, 114, that's always a nice area because you have some support there in that level. And you can see when you take this out, right there, we get into this, you get into this. This level ultimately is also quite support in there. So that's kind of a nice area. Obviously, if you can get it a little bit lower, that's great too. Or you could draw a trend line even like this. So those are some key levels, and hopefully that gives you some insight to evaluating the chart in a few different ways. All right, so we're pretty much ready to get started. I have a nice lesson here for you today, actually. So let me go ahead and turn on a few things. Here we go. So first off, there we go. Everything seems to be working. All right, so welcome to episode 134 of Let's Talk Stocks. I'm Sasha Evdokov, if you didn't know, and today we'll talk about finding some new hot stocks. I'll give you some tips, some insights, some key things, and I'll also do some Q&As. So as you get some Q&As, by all means, post them and let me know. I'm also going to rifle through a few that I have currently right now on screen. So why don't we do that first? We'll do a few quick Q&As right now, and we'll look at some stocks. We'll look at the market overall, and then we'll also take a look at finding new hot stocks and what does it really ultimately mean. So how do you discover these things? So I'll give you a quick insight to it. Obviously, we can even get into more detail beyond a course or even a whole 1 to 2 days about finding new hot stocks, but maybe this will give you some insights to starting out and getting started. Now, keep in mind, anything here that we cover and discuss, of course, is for just educational purposes. It's not any recommendations to buy or sell any stock, especially if we mention, hey, this stock could be a hot stock, simply because you might be watching this video sometime in the future. So keep that in mind as we go through the lesson. In either case, let's go and answer a few questions real quick. So that's what I'd like to do right now. So let's take a look here. Let me see. All right, so first one, hi, I am a beginner. Do you think start with penny stocks is a good start? Please advise. Definitely not. I typically don't recommend that people start with penny stocks. And the reason for that is because if you're starting with penny stocks, they're a lot more volatile. They're more manipulative. So they get manipulated. So it's a lot more difficult to trade penny stocks. My best example, I would say, or a nice example for this is think of it like driving a car when you're 16 years old, but driving at 200 miles an hour. It's a different ball game in that case. So you want to be a little bit extra careful. Okay. Let's see here. Go to the next one. Here, next question. Okay, how to make a watch list and what tools and websites do I use to create one? Stan asked this question. Eric did put a note here saying, hey, Sasha has a great video course on this, how to scan stocks and build a watch list, which, yes, you can take a look at that course there on Rise to Learn. Okay, let's take a look at the next question. How does one close out a portfolio, all at once or pieces at a time? Typically, and this depends on how many positions you have. If you have like 2 positions on, let's just say 2 stocks, and you're going on vacation, you definitely want to get out fully, then I would say you could do it pretty much all at once. But as you start, building up an account, building up positions, you'll probably start scaling out of positions, taking profits into strength. And we'll be going over a little bit of this today, actually, as we look into the markets. But usually it is in pieces or in parts at a time. Especially as you start trading larger. I'm not saying that any of you are trading at hedge fund levels, but if let's just say you have 100,000 shares of a stock, you might say, okay, well, today I'll get out 5,000 shares. The next day I'll get out another 10,000 shares. 3 days later, another 5,000 shares. And that's just so you may not move that stock specifically in the marketplace. Because sometimes when you trade too large or you have a larger account for that stock, you might move it around if you try to get out all in one day. Okay, next one, how to monitor the volatility that affects my option position. It's a little bit more difficult question to answer because it really comes down to the volatility that you have on hand. So depending on the volatility that you have, then what you want to do is look at the previous volatility for that equity or also the VIX from the overall market and then see what the change is. Now, this also is going to affect your position depending on if you have a positive Vega or a negative Vega. But if you still have questions about this, by all means, reach out to me personally and maybe I'll shoot you a quick 2 to 5 minute video and explain it to you based on the position that you have. But ultimately, it comes down to if you have a positive Vega or a negative Vega, and then look at how the VIX reacts. That's the simple approach. And that's how kind of you monitor how the volatility affects that position. Okay, here's another question. Sasha, I'm familiar with market orders. I can sell at any time with them. Does this also apply to limit orders? Let's say I set my limit and I was able to buy at the limit. Can I sell at any time I see fit? Thanks in advance and thanks for the video. Yes, absolutely. Market orders and limit orders simply just means how you're buying the fish. So in this example, if you go to a restaurant and you're looking to purchase fish, let's just say I want a grouper sandwich, and that grouper sandwich is at market price. Well, it could be $16 one day, another day it could be $18. So you'll pay the market price. Does that mean you can have it anytime? Yeah, pretty much, because you're just paying the market price. A limit order, on the other hand, is basically a flat price. It's like $10.99. It's you set the rate. So the same thing in stocks. If you set the rate, that's what you pay, or that's the most that you pay. With a market order, they'll fill you, but you might be paying a little higher price than you expect. All right, and let's take a look one. Another one here is, I'm currently holding a bunch of ETFs. Do you recommend any specific ones? No. I don't. I don't know you. I don't know most people personally that ask me questions like this online. What do I recommend for them? It's really, since I don't know you, I can't really recommend anything for you. It's more important that you learn to evaluate your own risk style, risk tolerance, risk levels, and then see what you like, the types of trades you like to put on, and then make your own trading decisions. Because I can't spoon feed you and I can't give you tell you what to do. eventually what I've realized is even if you tell people what to do, then those people, what they actually want is then they want you to tell them which stocks to trade. After that, they'll ask for, hey, can you trade my account? So it just starts creating a cycle. So in either case, since I don't know you personally, I don't know your risk tolerance, whether you're asking me about a stock, if a stock is a good buy or a bad buy, it just really depends on your hold time, your risk levels. And, you know, for everybody, it's going to be different. So in either case, that's the long and short of it for the recommendations. All right, so let's take a look at our overall market here. And if we take a look at here a few quick stocks, then we'll get into our lesson. Here we have the S&P, and when we look at the S&P, you can see we're getting into this $2,400 level right there. And we're kind of building a little sideways consolidation level. The Fed basically released no change in interest rates here. So the market stayed fairly stable. We did have like a 10-point sell-off here during the day, and then they brought it back up to a -3. Overall, there is some trouble up here, up above, and simply because when you really look at the market, and when we start drawing lines out, since that November time frame, we're quite extended, right? So we've had a very nice shot up. We got a little pullback in that market, and if we do get that B or C to D pattern right here, so if we do get that explosion, we need to have some fantastic things happening politically, fantastic things happening with earnings, fantastic things happening globally as well. And I'm talking about for this year. Of course, this can digest much further, so we can digest. Let's just take this back and say, okay, let's digest for half a year or a year and then go further. Then that's more likely and more possible. But in this case and scenario, for it to happen this year, it would be a little bit quick. And if it does, it would be a little more stretched. So in either case, with that being said, you know, as we get into this 2440, 2450 level, we start to get stretched. As we get into 2460, it's even more stretched. And if we get into the 2500 level, which is another 100 points higher, I would say people are very euphoric at that stage. So be a little extra cautious, and I'd be a pretty serious bear probably at that point, of course, depending on what's happening. Okay, let's take a look at some of the other popular companies here. Apple released some earnings, so this one holding up fairly well since breaking out past this point right here. So still moving, still holding up well. And then we did earnings, and you can see it's still holding up above that level. But if it breaks below this, you could see that it may be a buying opportunity. Now, keep in mind, usually the market runs with those leaders, so it lags the leaders. So if these leaders start selling off, the market will then later usually sell off. Could be a week later, could be 2 weeks later. But if you start seeing like these leaders, like an Apple, like a Facebook, which also just had earnings, I think it's down about $3 in after hours. Let's just take a quick peek. Yeah, it's about $3.79 down in after hours. So, you know, and then you have the Tesla, which is also down about another $7 after hours, which just released some more numbers. So all these things really are struggling a little bit. And if you have Amazon, that also, if it starts pulling back, although this one had some seriously strong numbers, but you could see the market pull back a little bit if everything just starts to go like the big companies, because then the other ones just start to come in as well. In either case, Amazon struggling at around 950. We also have Google doing quite well. We've talked about this one in the charts and the critical charts. Past that 900 level is very good. Of course, you do want to be very careful with the gap, especially as we get into that 900 level. But so far, it's holding that 900, and I wouldn't be surprised if this continues running further, and then it may come back to test that. So you always take profits in the strength. And that's one of the main things I want to mention. So keep in mind, just like with US Steel here, that had a really nice breakout around the election time because, well, what's going to happen? Well, steel is going to do great. Steel is going to do fantastic. There's going to be great policies, right? Amazing policies, the best policies you've ever seen. And, well, here's what happens. Well, things go up on euphoria, right? Euphoria, pull back a little bit, go a little bit higher on euphoria. And then things start to sell off a little bit. And then finally, when earnings come out, say, well, it's really not realistic where that price is. It's a little bit too far stretched. So we get that major sell-off, and when you ultimately look at that stock, we were down, I believe, about a good 28% in one day. So that took out, let's see, about from here to here, 5.6 months worth of gains in one day. 5.6 months. So that's why you always take profits into strength. So as a stock is moving in your favor, so let's say we came out here, you were smart and partly lucky, got in at the right stocks, right time. You did your homework. What you do is you slowly start taking profits into strength as we get stretched, because look at this moving average, right? Look at this moving average. Eventually this comes back to it, right? So that's what happens. So you take profits into strength. Even if you took profits somewhere around February, again, take profits into strength. We went a little higher, again, further stretched, taking profits into strength, and then we come back. We get under it, and then we had some serious trouble. So that's kind of what happens as you get overstretched. Goldman Sachs, also this one very, very stretched, as far as at this price level, and then continues, pulls back a little bit, and now it's struggling once it got under this resistance level. So if you really look at it on a longer term, here you have resistance at the 250. You can see that was in 2008, right before the major crash. Again, irony behind it, right? And then we're getting back into that 250, 252 level. And as you get into the weekly, you can see we broke that level, and now we retried to get above that, and then the stock sold off a little and staying right under that level. So anyways, that's kind of what's going on with the market, is that a lot of things are, struggling. They're not pushing higher on fuel. They're idle. They're moving sideways. So be very careful as you continue to look for upside trends and upside momentums. Be cautious and look for the hot stocks. And that's what I want to talk to you today about, is really we're looking at the hot stocks. So if we start here today on episode 134, looking at the hot stocks, first things first, what kind of stocks are you looking for? If you're looking for hot stocks, are you looking for higher dollar stocks? Or are you looking for lower dollar stocks, or maybe mid-range price stocks? Because you probably play in a certain range or region of pricings in the stocks. Some people like cheaper stocks, other people like mid-range price stocks, and some people like expensive stocks. So if I was to create kind of a scan, let's just say, and I have a couple of different scans here, but let's say I created a new scan. So what I could do is create a new scan here, and I'm using TC2000, by the way. And you can, by all means, go to my website there at TRADERSFLY.com. And if you want TC2000, it's under resources. I think there's even a coupon code for $20 off. Yeah, so you get a $25 off discount by going through that coupon code if you're interested in TC2000. In either case, so what you could do is you could look at the Russell and search through all the Russell stocks. You could pick a certain, let's just say S&P 500, Dow Jones, the NASDAQ. I mean, you have a lot of stocks that you could look through, right? So looking through a lot of stocks, and let's just take a look here at, there's a lot of different things. So let me open this up. Let's do all of it. So you basically have the Dow Jones, the S&P 500, you have high cap 1000. So if I start looking through this, you could even go through the full NASDAQ, right? So I could say, okay, I'm going to look for NASDAQ stocks right there. Okay, so now it's going to search for NASDAQ related companies. I could go to NYSE, right? So I could go to NYSE and it'll search just for the New York Stock Exchange right there. I could go to mutual funds. Let's see. There's some other ones over here. CBOE Gold Index. There's a bunch of things. So you can basically say, okay, I want to search through this group of stocks, right? And to make our conversation simple, let's just say we'll either use the NASDAQ or the NYSE, right? So if we go with NASDAQ right here, okay, I could throw in a condition. And let's say I'm looking for stocks, let's say price. Okay, so I'm looking for a price, and I'm looking for a price between, let's say, something around $10 to $22. So if I'm looking for $10 to $22, I might want to start it out with $8 and go to about 25 or so. Okay, so I'll look at this. I'll also probably want some volume of, let's see here. I could do volume 5 day, I could do volume 1 day. So there's a lot of volume options. Let's do volume, the standard volume, and you could say greater than, less than is between, ranks, and I'll do ranks. I usually like ranks because that way you're getting that top stocks that are trading higher volume. So just ranks in that higher percentage range. And I could just say, okay, and now we'll go ahead, we'll do this easy scan, and there you go. You see I have 224 stocks. So I could go ahead and move this over, okay? And now what I can do is I can sort it by price, okay? And I can sort it by price again, and now I'm starting at those $8 kind of stocks. And what I'll do is I'll start looking at it maybe at a 2-day range. I could do it at a weekly range or a monthly range. And I'll start looking at these stocks, and I'll start flipping back between the daily range, between maybe a 3-day or a weekly, and then a monthly range. If something catches my eye, I'll flip back in charts. But basically, I'm using the spacebar here to hit and look at stocks. So this one, for example, this is the monthly chart. I would say it's a little extended. Now this one would have been great to get as a little consolidation pattern right here, right? So we have that little consolidation pattern. But otherwise, I would say it's a little extended. If you look at the weekly, also a bit extended. If you look at the daily, you know, the stock has moved, and it was a great penny stock at the $3 range before. We didn't catch it at the $3 because we're scanning for $8, right? So we're in a different bracket. But in either case, you're starting to kind of figure out which stocks you're looking at, and you start getting familiar with it, okay? So that's kind of what I'm doing is I'm looking at the charts and I'm scanning them. And if one catches my eye, I'll go to the daily, go to the weekly. If one catches my eye, then I may put it on my watch list. You can see that here, these stocks that move erratically are not the stocks I want to be looking at or trading. Those are not the ones I'm looking for. So which ones am I looking for? Well, I'm typically looking for stocks that have clean charts, stocks with good volume, stocks that are either have broken out in the past, because if they had nice breakouts in the past, they may have nice breakouts here in the future. If they have that good volume, if they have good price action, and if the chart is easy and clean to read. If the chart's a little difficult to read, you know, like for example, GoPro is a nice easy chart to read. So I always have certain stocks on the watch list. And you can see this is a nice digestion period. But would I touch this stock before it gets above that $17, $18 range? Probably not. You know, this stock has sold off in a big way. And sometimes these things stay down there for 3, 4, 5 years. You know, so you can see here was our ABCD pattern. Same thing, major sell-off. And now stock is digesting. So we'll see if it gets back above it. But again, in this case, you just say next. Because what is it doing? Nothing. Okay. So anyways, you start scanning these stocks and you start looking through and seeing if anything catches your eye. If things are breaking lower, you know, you can see many of the cheaper stocks, in fact, will be stocks that you'll want to short rather than stocks that you're looking for long positions. And that is simply because they are cheap for a reason. But if you're looking for one of those few, then what you're doing is you are looking for cheap stocks, but you're keeping it in a watch list. Similar to how here we have a kind of a digestion pattern, and then you're waiting for these breakouts. When the volume picks up, you might have caught it on this bar. Even if you missed it there, you might have got it on the second bar. And then, you know, you have this next consolidation pattern. So that's ultimately what you do. Now again, at that point, that stock was $2, $3, but you're looking for the same thing here for $8, $10 stocks. Because if you're looking at $10, $15 stocks, and they do that, they have a high chance of getting into $25, $35, $45 stocks. Whereas a $5 or a $3 stock may only be a $10, $12 stock, and that's about it. So in either case, just a personal preference depending on what it is that you like. So you start scanning, start looking, and you can see here this one, absolutely nothing. And seeing what is it that catches your eye. What patterns you're looking for. And ultimately, you know, this process takes a little bit of time. Sometimes you can have charts rotating on your screen, and other times you can do it manually like this and watch for pullbacks. Like here on AMD, you can see this one was a very popular company here just recently, major explosion, getting away from that moving average. And now what you can do is wait for a pullback. And you can see already we're getting that. So major euphoria, that's why you take profits in the strength. That's why we talked about it. And if you're waiting for pullbacks, this is what you can do, is you can wait for those moments to where it comes back to those levels and creates, again, these kinds of patterns. But that's what you do. And you can see how some of these things create some explosive movements and then also sell off in a big way. So stocks that are usually cheap, they get manipulated. And that's kind of one of those right there that's easy to see. Boom, explodes and back down, back to where it was. It's cheap, right? So continue working through this and you'll start seeing right here where this one right away caught my eye. Here's on the weekly. Let's look at the monthly. You can see on the monthly we're somewhat getting into that range as well, and I can back this up and say, okay, well, is this one I may want to get in or watch right here at this price point? So you can see in 2008, 2009, there's some trouble here, right? But ultimately, this stock is coming into that level right there. And if it breaks out beyond that, well, can we get more upside? You know, maybe to the $20 range, maybe to the $26, $27 range. It's possible. But again, this is something, okay, maybe I'll put it on the watch list, keep an eye on it, and that's what you do. Now, if you're trading the more expensive stocks, let's just say we're doing another one. Let's say we're creating a new scan, and I already have a couple of these scans set up. So I do Russell $11 and higher, and then also 85% volume and beyond as well. So we can just go ahead and open this up. And basically, again, the same thing. I may go ahead and do this. And let's just look at some of the volume that's been moving on and happening today. And you can see which stocks have the most volume, which ones are surging in volume. And you can see this one, boom, right there, coming in on the volume. Others may be selling off on volume. So you can see this stock, HTA, is selling off on volume. This one, VWR, popping higher on volume. You know, and you start playing with this. Again, same thing, MOH right there, $60 a share, breaking out. Would I chase this? Probably not. I mean, you're still looking for setups, right? You're looking for the right opportunities. Am I looking to chase stocks? Absolutely not. So if they're gone, that's it, they're gone. Instead, what I'm looking for then is where's the next pullback? Where's the next setup? Where's the next position? So same thing here with Twilio. If you look at this stock, that's why you take some profits. If you got in it over here at 26 and then you got up into 35, you should have taken some profits. Otherwise, you see that major sell-off. So here you can see First Solar as well, right there. You start looking, okay, well, is it turning around? Is it getting into the moving average? The volume, right? Is the volume building up? Because you can see the selling pressure is going down and then the other volume is picking up. So then you start looking at it further. Okay, well, where am I on the monthly chart? Okay, you start looking at it. So is this a value buy? Is it a chart that's breaking out on support and resistance, or could break out on support resistance sometime in the future? And that's what you do. You start looking at things, evaluating them, and start seeing if there's any stocks that catch your eye. And sometimes you just go by price, right? So for me, I like trading the higher dollar stocks. So pretty much I already know most of these higher dollar ones. So like O'Reilly breaking down. Let's see if we go into a couple other ones. Goldman Sachs, we already talked about. Humana breaking out further simply because, well, you know, if insurance premiums rise, they make more money. So there was an earlier breakout there. So again, the next breakout. So that's why I watch these older breakouts. And I get familiar with the group of stocks. When you get familiar with the group of stocks, like the higher price stocks in my case, then you watch those trend lines periodically. You're looping and looking at the same things time and time again. And over time, as they break those lines of support, lines of resistance, then you go ahead and get in them or get out of them and short them. So here again with FedEx, I've been watching it right here. You can see a couple different trend lines on it. Here's my consolidation pattern. I'll go back, I'll scan it. Here's some more resistance. You can see we're looking, okay, are we going to hold this level? We also broke that level a little bit, but are we going to hold now and consolidate sideways? So that's kind of what we're doing right now, is just moving sideways, and we're managing to hold that range. So I'm watching, where are we going to break? Are we going to break up, or are we going to break down? Where's the volume pushing it? And that's what you do. So again, same thing, doesn't matter which stock it is. Domino's Pizza, you can see this one's created kind of a stair-step pattern. So stock consolidates, stock consolidates, powers higher, again, consolidates, powers higher, consolidates, powers higher, and then again, right there. So there we go. So there again, we're consolidating, waiting for that next break. If you got in it earlier and you want to add to it, that would be the next point. Or you could do it on a pullback sometime when we're bouncing. Either way is fine. It's just a style, personal preference, depending how the market's moving, depending on your position. You could do it on pullbacks, you could do it on breakouts. Totally up to you, but you can see it's moving in these kinds of patterns. All right, so let's take a look at some more questions here. Was HTA an easy read? So let's go back to that chart. Easy read, it comes down to experience. So some stocks for certain people are easier to read than others. Maybe they're more familiar with patterns. I would say it's a clean chart in the sense of, if I look at it, you know, the stock isn't really erratic. It has some good behavior in the sense of, especially if you look at monthly charts, it really cleans things up for many stocks. If they don't, then yes, it's a messy chart. In this case, you can see we're following kind of this pattern right now. So you have 2 points right there to make that support, and then you have the third right there that's being created. And if we get in here, the fourth, and it holds there, then by all means, that's fine. If you look at some closer zoomed in versions on the weekly, you can also look at A, B, C, D patterns right there. So you could say, okay, well, this is A to B, B to C, C to D, right? You could also do it on a shorter term, A to B, B to C, C to D. You could do it that way. And now the same thing, right? So you're starting to watch what's happening recently, because now it comes down to what's recently happening. So the stock is easy to read, but here's the issue with this stock is you have some major volume on this selling action, and we're also creating lower highs. So that's usually a problem for stocks. If this stock was moving in this way and then went higher, and now we're actually creating higher highs, that would be a different story. But in our case, we actually create a lower high, so it's changing direction. So you can see in the past, we're creating higher highs, but now all of a sudden at the swing point, at the change of direction, we're creating shorter term lower highs, right? So the same thing here, shorter term lower highs. So is it easy to read? Yes. Is it tradable? Yes. Is it one for you? It depends on you personally. How can the little guy with small accounts, $5,000, see any real gains trading stocks like these? It's very tough. When you're trading a small account, remember the market is really set up for people with money. So the market actually moves really well when the little guy gets hurt. So I'll give you an example, insurance companies like Humana. When insurance premiums rise, okay, and everybody pays more for insurance, usually they rise because the wealthy people don't have to pay more on their taxes, right? So this is what's kind of happening now. So being a little guy, you're forced to now pay more for insurance premiums because, well, of the policy effects. And when this happens, the insurance companies make more money, right? So they're charging more money, they're allowed to charge more money, and the marketplace is just higher price for insurance premiums. So everybody's getting billed more on their insurance. But this increases their earnings. And when this increases their earnings, the stock price goes up. So the simple and weird, but also the nasty thing behind the stock market is when the little guy gets hurt, the market goes up. As ironic as that is, because remember, the market's all about big corporations, right? Big time corporations. So again, as with Trump being elected, you get big corporations, corporations make more money, the little guy has to pay more taxes and that kind of thing. And that's the same thing. When you're looking at having a small account to be able to make it in this business, it takes a lot of work to make money in the market, especially with a smaller account. Because if you're making 1% on $5,000, the absolute dollar figure of that 1% is is minimal compared to buying bread, buying food at the grocery store. It still costs the same whether you have $5 million in your bank account or $500 in your bank account. So it's very difficult. And for many people who say they turn to low dollar stocks and high volatility, I can understand that. However, usually for many people, they put on too much risk for what they're capable of. And, again, you have to judge that on your own. But for many people, I don't advise that they trade low dollar stocks because, again, you look at the percentages. Yes, you can make a little more maybe on the low dollar stocks, but is it worth the additional risk for that? Again, you have to kind of decide that. Okay, so Stan asks, can you play these patterns that you go through work on penny stocks? I'm new to all this, so I started on penny stocks. Can you play these? Yeah, you can play these on penny stocks. The concept is similar. The difference with penny stocks, and probably what I should do is kind of like a few-part series, mini free course on YouTube on penny stocks, because a lot of people are interested in penny stocks. But you can do these penny stocks, these same patterns on penny stocks. However, the problem with penny stocks is, number one, they're manipulated. Number two, they're usually better shorted than going long. You'll usually make more money going long in terms of the overall or general market, simply because stocks can go up much further than they can go down. But with penny stocks, they're cheap for a reason, right? So if you look at buying something from a country that produces horrible goods, or let's take, for example, here, like I have a quick little clamp here that I use for filming. Production of these goods and clamps might be, if it's in a factory that's really bad and the production is bad, then eventually that clamp will fall apart. And that's the same thing that happens with penny stocks. They're usually on there for a little while, and then after a while they get manipulated, especially if they're low liquidity. And then what you might even see is the splits happening, like stock splits, and eventually they either get sold off or they're not even listed anymore, and a lot of people just get stuck in positions and just holding a worthless piece of stock paper, or not even paper, digital goods these days. So be very careful with that and just understand what you're doing. Absolutely. Can you trade the patterns? Yes, you can definitely trade the same patterns, just usually they're in and out much quicker with penny stocks. I would say it's a quicker trade. You have to be more active. You're taking profits into strength much faster, and that's kind of the approach I would say you should take or look at when you're trading penny stocks. So in either case, I hope that answers most people's questions. I think I answered just about every question on here so far. If you have any other quick questions or quick stocks, let me know. I think we'll wrap it up here. It's already, give or take, about 40 minutes here that we're on air. So let me know if you have a couple more questions here. I'll give you a few more minutes. But let's just go ahead and continue looking through a few more stocks just to scan and look at things. So again, Johnson & Johnson, the same thing. As you can see, you still keep stocks on the watch list, even if they break out past a certain point, right? So even if I miss this breakout point, which here was our resistance, you can see we broke out, stock continued to do well. Eventually that stock came back, right? And we bounced at that level. So that's why I keep these stocks still on my watch list, because then it gives you that opportunity for, oh, wow, it's a nice clean break. And even if I missed it right there at that perfect spot, could you get in it a couple days later? Yeah, absolutely. You had a few weeks to get into that stock before it actually exploded. And you can see that volume was building through time, right? Throughout those weeks. So if we go to, let's just say, a 2-day, you can see the volume building right there, okay, as we go ahead and start increasing. And even if you wanted to play it safe, right there was your breakout point. So even if you didn't get into it right at that bounce, you had all this time to kind of get into it, because this price level was holding. That price level was holding. And if that's holding and it's above it, that's a good support, right? So you're watching it. And if you go to the daily, you can see it even more specific, right? So again, right here, here's our kind of resistance level. Stock bounced, could have bought it on that value buying opportunity. Moving sideways, couldn't get over it, right? Comes back, but didn't even have enough strength on the sellers to go in all the way to the bottom, right? So what does this mean? We're creating higher lows, right? Before we talked about lower highs, now creating higher lows, and it's holding, okay? And now we got into this and we broke out. So even if you bought on the dip or the value right here where we're holding higher lows, you went ahead and you can see the volume is starting to build a bit right there. So that's our volume building. You could have got in right there or even earlier, and you could have even got in on the break and you still would have made good amount on that run. So from there, let's just say even if you got in late at 118, 119 and you got in all the way up to, it's about $8, an $8 run. And even if you took profits in the strength, let's call it $7 or $6 for conservative reasons, still $6 on the trade. You know, many people should be delighted to get $6 on a trade, especially on something like Johnson & Johnson that is a little bit slow. Okay, so what would your main suggestion be to college student looking to trade such as a small account? I would say if you're looking to trade personally, I would say go with statistics, and you could probably look at picking up a few books on statistics, and that is all about probabilities, probability, chances of success, risk management, and money management. I don't think there's too many college degrees out there that really focus on trading, and most of the economics classes, which I've actually taken, are not set up for trading. They're set up to look at the economy on a macro view. Even though they may teach microeconomics, they're not really set up for trading specifically. So I would say you're kind of wasting your time and energy in school, as far as traditional school goes. Instead, you're better off to take, let's say, a class costs $2,000 or $3,000, to take that $2,000 or $3,000 and get, let's say, 4 hours of coaching, and then 20 books, and then maybe 3 video courses, and there's your $4,000, or give or take, whatever you can get. Because at least that way, you get the material that's more specific and direct for trading, right? So instead of going, hey, let me go to a teacher in traditional school that teaches about economics or personal finance, why don't you go directly to the people who are trading and get that material there? So that's kind of what I look at, or what I would recommend as far as college is and school and studying. What free websites can I use to screen stocks? Any free basic chart platforms. I think freestockcharts.com is the free version of the TC2000. You have FinViz. There's that one. So, I mean, there's a handful of them out there. Their TradingView as well is out there. They're constantly changing, and there's more and more that pop up all the time. It really doesn't matter. Get one that you're comfortable with. Find one that works for you. I use TC2000 because it's fast for me. I flip through charts so quickly, and I run through them, and it's responsive. For you, you might choose something else a little bit different. Again, that's just a personal preference. All right. So thanks for joining me today, and I truly appreciate you making an evening with me. Hope it answered some of your questions, and I hope you have a great trading week ahead. If you have any other further questions that maybe you think of as you sleep at night, by all means, feel free to shoot me an email or message me through the website, and I'll be sure to answer you. And even if needed, we'll make a quick little simple video. If you didn't get a chance to join me today on a live session, and you're actually looking for a live session, you're watching this as a replay, by all means, join me on a live session by clicking the button over here. I guess we'll put it over here. Click that button, and when you get there, it'll take you to a newsletter subscription, and that's where I send out the details for any of these live sessions. So thanks again. Enjoy your evening, and make it a great week ahead.